Hey guys, Michael Edward here with True Trading Group. December 14th, my first red day in a couple of weeks. And what I want to talk about with this video is not so much a chart pattern or a chart analysis like most of my other videos and a physical lesson, but this is more about a mental lesson. And what I want to discuss is the importance of mental capital and why mental capital is a lot more important than financial capital, which is the actual money that is in your trading account. That might sound a little weird to you guys, but trust me, over the length of your career and as you progress as traders, that mental capital is 10 times more important, because without that mental capital, it does not matter how much money you have in your trading account, it will be worthless without that mental capital. And I'll get into that and I'll explain why. So first I want to start off with IMUC. Okay, this was a stock that I went after in the morning. There was a news catalyst. The stock was gapping up above a key resistance level. There was a gap on the daily chart that I thought we were going to be able to push through once the stock gapped above this resistance level that you see right here on the daily. It was like around 46, 47. Let me see if I can get this line to cooperate with me. Okay, right here around 47, 48 cents. And we gapped above it, and I thought the stock was going to hold that previous resistance as support and then push further up into this gap. I really thought we was going to have a home run trade. I was focusing on this all pre-market, and I went after it in the morning, and I got long at 52 cents. I ended up getting stopped out at 47.5, but I went after it. Okay, so I took a hit right off the jump. And then after that IMUC, I made another trade. And I took a small loss on, so I was 0 for 2 on my first two trades. And this is where the mental lesson comes into play. When I went 0 for 2 on my first two trades, and I took a pretty decent sized hit on that IMUC, I came on live in audio and I said, guys, all right, I just took a hit. I need to scale it back a little bit. You have to stay calm. And I pulled the reins back on myself, and I took it from fifth, sixth gear down to first gear. And I said, I'm not going to get angry. I'm not going to try and revenge trade. I'm not going to start to push, because obviously I'm not really seeing it right now. And I'm going to actually scale my position size back, and I'm going to look for singles. Okay, and I just want to chip away at my loss. I don't want to make it all back in one trade. Okay, I just want to chip away at it. And this is what this video is all about. Because after you just take a big loss, or after you take 2 or 3 losses in a row, that is the moment when you are the most vulnerable as a trader. That is when you will start to get out of your comfort zone. You'll start to deviate from your strategy and your game plan. You'll start to break your own rules. Okay, that is the moment when you are dangerous. Okay, you're dangerous to yourself. All right, when you're making money and you're hot and you're on fire, that's easy. Okay, your confidence is there. You're happy. You're in a good mood. You're in a good mental state of mind. But after you take that hit, that's when you're vulnerable. And it would have been very easy for me. Now, I was down in the morning, okay, but it was still a manageable. It was just kind of like a regular red day. I didn't get crushed, but it was just kind of a regular run-of-the-mill red day. It would have been very easy for me to have gotten really upset at myself and then pushed and tried to make that money back. And what was a manageable red day could have turned into an absolute disaster. And I don't want to see that ever happen to you guys. The mental part of trading is 80% mental. Everybody sees the same stock chart. We all see the same candles. We all see the same moving averages, all the same technical indicators. Okay, everyone sees the same stuff. It's the mental part that will separate a great trader from someone who just tries to trade and then ends up failing and going on and looking for something else to do. Okay, and it's the importance of that mental capital. And that's why I came on chat and I said, I'm going to scale the reins back. I'm going to take it easy. I'm going to be tight with my stop losses. I'm going to lower my position size, and I'm going to stay calm. And this is what I want you guys to focus on. Okay? For that reason, I missed OHGI. OHGI was our trade setup that went crazy right around lunchtime, around 12:30. Now, I missed this entire move in OHGI. A lot of members in chat caught this move. And I was so happy to see so many of our members catch this OHGI. I really, really was. I did not go after OHGI because one of my rules that I like to stick to, or that I like to trade, with, is that I don't like to enter a position for the first time during lunch. Okay, I don't trust lunchtime breakouts. They tend to fail more often than not because they usually don't get that type of volume and follow through and strong volume that a stock needs to continue to push during lunchtime. Mostly the volume comes in the morning session or the afternoon session. So I try not to open a position during lunchtime. Okay, that's why I did not go after and pull the trigger on OHGI, because I was saying to myself, after my loss in the morning, I need to scale it back. Okay, I need to stay disciplined. So if I'm scaling it back and I'm staying disciplined, then I'm certainly not going to go and try to break one of my rules. I loved the OHGI setup. I did. I was walking, I was actually talking through the trade setup and walking some of our members through, but I didn't pull the trigger myself because I was focusing on my discipline and sticking to my rules after I just had a red morning. Okay, let me get to OHGI chart setup, and I'll just kind of show you guys what it was that we were seeing. So here's OHGI. I had to zoom in a little bit. You can see this OHGI after it broke that initial morning high. Okay, broke it on an increase in volume. The stock then found support right at that previous high, but that previous high was also the VWAP. One of our members came on around 11:30-ish and said, it looks like we have a setup here. It looks like the stock is holding above that previous morning high. Then I came on, I identified that VWAP was also converging on that same area. So you have two support indicators that converge on that same area, giving you a little bit more confidence that you can get long in front of that support, because it's not just the previous morning high, it's also the VWAP. Okay, stock ends up breaking out. Okay, ends up breaking the high of the day right here at 12:30. Here's your increase in volume on the break of the high. I did not go after this trade because the stock broke out to a new high at 12:30, and I was sticking to my rules. And hindsight, the stock exploded. I wish I went after it, but I'm not upset with myself because this is just one trade. There will be more OHGI. Okay, but what was more important for me at the point that I was in my trading throughout in that day was, I need to focus on my discipline now and manage my loss, because that is more important, and that will help me throughout the length of my trading career. OHGI is just one trade, but focusing and honing in on your discipline is invaluable over the course of many, many years. Okay, and it's really something that you need to develop as a trader. So I wasn't mad that I missed OHGI. I'm happy that I was able to stay disciplined, stick to my rules, and keep my manageable red day at a manageable red day. And I didn't get out of hand. Okay, but I'll go back to the chart. Stock broke through the high of the day, got an increase in volume. The stock then pulls itself back in. So here's your previous high of 150. Okay, so there's your previous high right here. Stock breaks it, increase in volume, pulls back in, finds support, and then takes off. This takes us back to a lesson that I've been posting videos on about volume and identifying the difference between strong volume and just an increase in volume. And with this OHGI, you can see after the stock broke through the high, you got that increase in volume, and then it pulls itself back in. When a stock pulls itself back in, it's okay to see low volume. Okay, you need high volume on the break, which you got. It's okay to see low volume, okay, when the stock pulls in. But as soon as the stock finds support at that previous high and bounces and turns the corner, you need to see volume start to pick back up. If you don't see volume pick back up as the stock bounces off the support level, the chances of the stock failing multiply. Okay, so as soon as you get that support retest and the stock turns the corner and bounces off that support, you need to start to see the volume increase. Okay, and you can see here, these first two candles after the stock bounced off that support, look at the volume bars. You see how the volume started to increase. That is your clue that the stock is going to push this volume. Okay, you see how the volume began increasing as the stock bounced off that support, and the volume just kept kept coming in. Look at higher volume, higher, higher, higher. It was just every single volume candle, the volume got higher and higher, and that is what strong volume looks like. Okay, and that is the clue that you need to look for. After the stock bounces off that support, you need to see the volume start to pick up, and that's going to be your clue that the stock is about to push. Okay, that it's not just going to be a one move and then it's going to be done. It's going to push and it's going to give you continuation. It's that volume, and that increase in volume right here as the stock bounces off that support is your clue for that. Okay, so many of our members caught this trade. I was so happy that they caught this trade. It was a phenomenal trade. I didn't pull the trigger not because it wasn't a good trade setup. It was a great trade setup. I didn't pull the trigger because I was in a different place in the trading day. And I was focusing more on my discipline and my rules. And one of my rules is to try to not enter a position for the first time during lunchtime. Okay? OHGI was just one trade. Yes, if I pulled the trigger, I would have made back all my entire loss and I would have went green on the day. But I didn't, and that's fine. And I'm not upset because I was focusing on discipline and I was focusing on mental capital. Okay? And I was able to keep my manageable red day a manageable red day. And I'll come right back the next day and I'll try to go green again. I haven't had two consecutive red days, I think since October. So I'm trying to keep that streak going. And that's really the importance and what I want to talk about in this video, more so than the OHGI trade. The OHGI setup, great. It was a monster trade. The stock just ran and went a lot farther than any of us expected it to. Okay, but it's the importance of controlling your downside. And when you take a big loss, or if you take multiple losses in a row, it's very easy to get frustrated and get angry, and that is when you are vulnerable as a trader. So when you feel yourself in that state of mind, take a break, walk away from your computer, or just take a deep breath, relax, stay calm, and do not try to make it all back in one trade. You will blow your account up. Stay calm, stay disciplined, stick to your rules. I know it's a lot easier said than done, but this is probably the most important lesson that I will give you guys as traders, because this is the difference. This is what will allow you to have a successful trading career over many, many years. It's being able to control your emotions and preserve your mental capital, because if I pushed, okay, I shouldn't push in a situation like that because A, I just took two losses, so maybe I'm just not seeing it. So you shouldn't push if you're not seeing it. And second, you shouldn't push because I'm not in a good state of mind. I just took two losses. I'm frustrated, I'm annoyed, I'm aggravated, and that is when your emotions can get the best of you. And like I said, that's when you're vulnerable and that's when you're dangerous to yourself. Okay, so when you feel that, pull the reins back on yourself, remember your rules, stay disciplined, and even cut back on your position size if you have to, and just go after singles. Don't try to feel like you have to make it all back in one trade, because that's how you'll blow up. All right? See you guys tomorrow.